Welcome back to America's Commercial Real Estate Show. I'm Michael Ball. This segment is brought to you by realcrowd.com. Check them out for crowdfunding for your next venture. Well, today we're talking about the self-storage industry. We've heard some from analysts to see what's going on. And I always like to talk to someone in the field, a principal or a broker who's dealing in the sector every day. Please welcome my next guest. It's Graham Hill. Graham is president of the National Self-Storage Group with Bull Realty. He's joining us here in Studio One. Graham, thanks for being with us.
My pleasure.
Well, Graham, you're talking to owners of self-storage properties every day that are buying and selling these properties. What do they think about the market right now?
Well, I think they're kind of slow to realize that change is on the horizon. They've had a tremendous run for about 4 or 5 years. Everything has been really going in their favor with increasing rents, increasing demand, very low interest rates. But it's hard to kind of get them to see you're facing a decision time, whether you're in it for the long haul or if this is possibly the time to sell.
Yeah, I mean, Barbara with Reese was suggesting that there's been a lot of new supply, right?
Oh, yeah. In fact, she even said that she thought cap rates were going to go up 125 basis points potentially over the next year.
That's huge.
That's huge, and that will have a huge effect on the value of your property.
Yeah, now, of all the analysts I've ever spoke to on this show in 8 years, I don't think I've ever heard of a prediction of a swing like that. So how much new supply did you see last year?
Well, last year was a tremendous year. In fact, it was double what came on the market in 2016. Yeah. And this year, potentially it could slow down a little bit, but there's a lot of new competition out there, and that creates all sorts of different situations for people. One, if you've got somebody that's opened up in your area and they're anxious to fill up their facility, they're obviously going to discount, and you're forced to compete with that situation.
Yeah, I think you can get complacent, I would think, if you're in a self-storage property, because maybe it's easy to manage, it's easy to own, but you know, if there's a low barrier to entry in your area and someone builds a new one. I was just talking to a developer this weekend, and he's building a new one, and I thought about the owners. They're in the vicinity. They have no idea, but he's going to put in a big one, and he's going to be able to put whatever rates he needs to do, you know, to fill it up, and it will impact the market on it.
Well, he wants to get to break even as quickly as possible, and that's just warm bodies or warm, not necessarily
warm junk.
I guess it's cold junk in your facility.
So is it a seller's market or a buyer's market? It seems like it's supposed to be one or the other, right? What is it?
Well, I think we're kind of approaching the crest of the seller's market. Mm-hmm. Right now, I speak to owners and I say, you know, this is a great time to sell, and they say, well, show me what else I could do with my money that I could make anywhere near the same return. Mm-hmm. And I advise them that it depends on what their long-term plan is. If they're planning on selling in the next 5 years, this is the time to really think about it, because the cap rate increase is going to affect how much somebody's going to pay, and your property is not going to keep the same value.
Yeah. Yeah, well, that's interesting. So, you know, if you're going to hold a property 10 years, then maybe it doesn't matter?
No, then it's fine.
Yeah.
You're making great income, building equity, and you're financing all the time. But if you're not wanting to sell, make sure you've locked in the best financing you can right now for at least another 5 years.
Yeah, it's interesting. I had a seller tell me once that, well, you know, the market's so high. If I don't sell it today for this number, for this low of a cap rate, then I really bought it. I mean, because I could have had that money and done something with it and made that return. So if cap rates go up over 1% in the next year, as Barbara suggested, I mean, if you have a sizable facility, that could be several million. That could be several $1 million. But if you have a small one, it's going to be $1 million.
$100,000, and if you're a medium-sized operator of a 30, 40, 45,000 square foot facility, you could be looking at a $200,000 or $300,000 swing.
Yeah, but there's still buyers out there wanting this product.
Yes, very much so.
Yeah.
So It's exactly the right time right now because
All right.
we're headed to a buyer's market.
All right. Well, you sound like a broker, Graham. Well, good work.
Well, thank you.
All right. And thank you for joining us. Great information, Graham. Thank you. Thank you for joining us around the country or around the world. We hope you enjoyed the show. And let us know what you think. If you own properties, you think it's time to sell, time to buy. What are you seeing for interest rates? If you're refinancing your property, you're seeing rates go up. You've seen cap rates move. Thank you for sharing the show, and thank you for being with us. And we hope to see you next week. Until then, be sure you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.